Are you close to buying a home, but you're afraid to because of the rising interest rates? Or are you a seller that is afraid that your house is going to sit on the market for the same reason? Well, you're in the right place because today we are going to talk about possible solution for you that can help you in this situation. Hi, my name is Tatyana Clark and I'm with Buy Sell Central Florida, brokered by Coldwell Banker, and I'm so excited to welcome you to our week 1 of our 7-week mortgage solution series. I'm here today with Denise Pantaleon, a VP of Mortgage Lending with Guaranteed Rate Affinity. Welcome, Denise.
Thank you for having me.
And everybody speaks about interest rates these days, and everybody's concerned that they're rising, and people are concerned. They want to kind of hold back and see what happens. But I would love to talk about the program that just came out, that you guys have launched, that might potentially address this issue. So why don't you tell us a little more about that buy down program that you guys just launched?
Yeah, so we launched the 2-1 buy down. As you know, rates have been cooling and a lot of buyers are on the fence. And right now, I think this is a great tool to get the buyers off the fence. It's a great tool for sellers to get that buyer off the fence, and it's a great tool for buyers to flip the switch a little bit and find a way to be more comfortable with their payment. So how it works is the 2-1 buy down is basically a seller concession. The seller pays for it on behalf of the buyer.
Great.
And they buy down the rate 2 points in the first year for the buyer and 1 point in the second year. The third year, it goes back up to the current rate.
Got it. So what does it translate to? Like, let's say if I'm a buyer and I'm shopping for the house today, how does that help me as a buyer? You know, what does it translate to roughly?
Well, you would lock in at the current rate, but for the first year, you would have 2 points lower. So if we were locked at a 7.5, the buyer would receive a 5.5 interest rate for the first year. Depending on the loan amount, that could save them, you know, $400, $500, $600 a month.
That's fantastic.
For the second year, it would reduce that that interest rate by 1 point. So it would be a 6.5.
Great.
And then the third year back up.
Got you. So if I understand it correctly, the buyer initially gets pre-qualified at the original rate of 7.5 in this example that we quoted, right? So the buyer is qualified for the higher rate. But for those of you that are thinking about buying, you get a break up front where, you know, when you're settling in the new home, you don't have to pay all this high, you know, like mortgage payment. So it kind of gives you a little bit of extra cash up front to be able to kind of settle in the new place. Exactly.
The money that you save, you can do repairs with or renovations or put that new floor in, or you can just save your money because let's face it, we're going to be refinancing in a year or so, which is another point. So the seller pays for 2 years on that 2-1 buy down. So you're like, well, where did that money go if I refinance in the first year?
That was
the money goes back to you in the form of a principal reduction or to pay for that refinance that we just discussed.
So essentially, it's almost like that pot of money sits in an escrow, a sort of holding place, right?
That's exactly what happens.
That you get to utilize. So if let's say mortgage rates go down next year, all of a sudden, and the buyer wants to refinance, they're not losing this money, right?
Nope, they're not losing the concession.
Fantastic.
It comes back to them in one form or another. Yeah.
Awesome. And if you want to sell the home?
If you sell the home in the first year,
it
would be a principal reduction. Yeah, so so your payoff would be lower.
So essentially, the buyer has nothing to lose whatsoever.
Buyer can't lose at all. It's a win-win.
Fantastic. Yeah. Okay, well, who can qualify? Is it primary residence only, or if somebody wants to buy an investment property?
Yes, it's primary residence only. We have conforming loans, and we also have government loans. So FHA and VA can also take advantage of this program.
As well as conventional?
Yes, conventional, FHA and VA. One more note, we have something very special at GRA, and we also offer a 1.55 buy down.
What is that about?
So it's similar to the 2-1, but in this case, for the first year, the buyer receives a 1.5 lowered interest rate, 1.5 points. And the second year, they receive a 0.5. So if it was a 7.5, they would receive a 6% interest rate for the first year, and a 7% for the second year. And the benefit of that for the seller is, remember the seller's paying for this, a 2-1 buy down naturally costs more than a 1.5 buy down, right?
Sure.
So that might be the sweet spot for the seller and the sweet spot for the buyer to get them off the fence.
So is it safe to say that the 2-1 buy down is roughly 2% of the loan?
For the seller's cost?
For the seller's cost?
Roughly, yes.
Roughly.
Close to that.
1.5 would be slightly cheaper because it's a less. Okay.
And then the least expensive option for the seller is the 1-1. 1 point for the first year, and then the next year it goes back up to the original.
Okay, so it really just buys you the first year of the interest. Perfect. How does that differ from your regular prepayment or of
loan
the interest
discount.
rate?
Yeah.
Right, loan discount.
Good question. So this is a temporary buy down. Because remember, by the third year on the 2-1 buy down, we're back to that original locked rate.
Gotcha.
Whereas with a loan discount, you buy your rate down forever. The problem with buying the rate down forever right now is we can't buy it down enough to get down to those 4s or low 5s.
Right.
There's just not that option, and it would cost probably 4 points at this point. So.
Wow. Okay. So Denise, you mentioned a couple of times that sellers would pay. So can the buyer pay for this program, or does it have to be the seller?
It has to be the seller. Yeah.
Okay. And just if those who are thinking about selling happens to listen to us, why would seller want to do that?
The seller, so perhaps you have a listing that's not getting a lot of activity, not because it's poorly priced or anything, but just the reason why buyers are stuck in their heads because of the interest rate.
Gotcha.
So if you can show a buyer how to have tomorrow's payment today, now you've got that audience back, and it may just get that listing sold. So and it's in lieu of a price reduction. So instead of reducing the price, let's just wake up a bunch of borrowers with that type of concession rather than a price reduction.
Right. So those of you that are sellers or buyers, so perhaps instead of asking for this money for the closing cost, another option for you is use similar pot of money, but to spread out equally across the first year, the second year, in form of reduction of your mortgage payment. That does help you get back on your feet during this process. Denise, thank you so much. I think this is a fantastic program. Yeah. Do you think we covered it all? Does every lender offer this program?
No, not all lenders offer this. Guaranteed Rate is always on the cutting edge, and we were quick to respond. This is a nostalgic program. This was once upon a time, this was offered years and years ago, and it's back for some of the lenders that can.
So this, to the extent, is unique to the company you work with.
Yeah.
Fantastic.
A few lenders are doing it.
Awesome. I'm going to put Denise's information down below. For those of you that want to learn more, feel free to reach out to me, to Denise. Denise, this is fantastic. So once again, we are here in the 7-week mortgage solution series brought to you so we can strategize and educate those who are thinking about buying or selling. Because, as the market shifts, as the markets adjust, you have to know what tools are available for us, both as buyers and the sellers. And so my personal goal is not to sell. My personal goal is to serve my community the best I can and able. And to do that, I'm always partnering with the best people in the industry, both mortgage lenders and other people as such. So therefore, I hope you find it helpful. Stay tuned for new episodes. Thank you. Thank you so much for tuning in. Please like the video, share it with others that can benefit, but also hit that subscribe button so you do not miss out on a lot of valuable tools coming your way in the near future. Thank you again, and have a great day.